Happy New Year. Welcome to Finance JCL. And today I'm going to share with you the UK element of my stock portfolio. It's the first time I've done this, and it's been a very useful exercise for me. It's allowed me to articulate and build the story why I'm owning certain positions and what mistakes and indeed good decisions I've made in the past. So without further ado, let's dive right into it. So here is the pie chart demonstrating my UK portfolio. The size of the slice, as it were, is the size of the position, and the percentage numbers that you see against each position is the gain or loss, total gain or loss, so capital plus dividend, versus the total cost of buying the position. And there's probably four colours here. So you've got the blue section, which is the various UK index trackers. There's the orange sections, which are some mutual funds. Now, the story with the blue is that I've been drip feeding monthly amounts into them to pound cost average over a period of several years. Story with the orange I just mentioned, I bought a load of them around about 5 or 6 years ago and I've just left them. And that was a time I didn't really understand how to pick individual stocks. So I went down the fund route. And then you've got the green positions, which is shares in the kind of finance and insurance sectors. And apart from one of those positions, all of those have been opened in 2020. And finally, there's a handful of grey ones. They're just kind of the ones that are left over that don't really fit any pattern. So FTSE 100, when I started investing, I think it must have been in this index about 2014 or so. I didn't really know what I was doing, and I knew that stock market's a good way to make money, and buy and hold was a good principle. And if you buy an index, you get an average return. But I had 30 to 40 years investing ahead of me. Therefore, I thought, well, an average return over that period with compounding, that's fine, and that will be okay. FTSE 100, and then same for the next one along the UK index, and between them, they make up about a third of the portfolio there. And the gains of 16% and 10% aren't particularly impressive, but a lot of the time in the last couple of years, UK index has been in the 7,000s. A lot of the cost averaging was at that level, and it's been below that since the pandemic started. So there is some more upside there, and I'm hoping those numbers improve, but I'm not adding to those positions. A bit overweight there. The next one is the ASI UK Smaller Companies. That was one of the first funds that I bought. I didn't really know how to pick stocks. And this one is of 136%. And that is kind of the small cap UK companies whereby there's good growth potential. Very pleased with the performance of that one. The next one is the Linsell Train UK Equity, up 93%. This is an interesting one because it's a fund that has a very small number of holdings. They tend to concentrate in 20 sort of 25 positions, mid cap really, and a couple of large companies, and that's done very well. And those first four positions take up about 50% of the portfolio, and I haven't been adding to any of those. I'm just going to let them stay there and compound. Now we get into kind of the 6 o'clock position on the pie. If it was a clock face, we get to Unilever. And that was, I think, about the second stock that I ever bought in my stocks and shares ISA. That was around about 2013. I had a little bit of capital, and my first foray into thinking about this was I want to buy some companies that I can just ignore. They'll definitely be around in the long term. And Unilever was that. And the total return, their capital's about 70%, dividend 30%, so that's 101%. Then FTSE 250 up 37%, but if I was going to put more money into the UK indexes, I would only put it into the 250 when that valuation or when the price drops. I think there's a lot more growth potential in those smaller size companies. Moving on to Shell, it's only up 4% in total, and the reason for that is the oil companies had quite a big drop in their price last year or so, and I'd expect that as a cyclical to recover somewhat over the coming years. Direct Line, that was one of my favourite companies, customer of theirs. Really like the company, the process, the way they do things, financials as well. Nice dividend, so it's not one that's going to kind of smash it out of the park growth, but it's going to chip in a nice dividend for me. That's up 28%. And then we get towards the 9 o'clock position, and that's the Aegon investment grade bond, which is plus 44%. That's been giving me between 6 and 7% a year since I got it, which is okay. Up to this point, everything that I've gone through, I've held for several years, some in cases going back to 2013. Everything now that I'm going to go through, apart from one, is actually something that's been purchased in 2020. So as I've been learning about how to value stocks, what my long-term plans are, how to find and identify these companies, this is kind of the fruits, the short-term fruits of that labour. So for the UK market, Aviva, which is one of my favourite investments and favourite companies, is up 27% in a short period of time. And every time that drops, I will buy more. Legal & General, not far behind in terms of how much I like them. And again, up 27%. Very happy with that. Nice dividend. And those two companies were on my sort of hot list during the summer last year. BT's Index, that's also up 27% in less than a year. And for me, I remember when they were down at £1 back after the 2008-2009 crash, they went all the way up to about £5. I went back all the way down to about £1, and I think the business is worth a lot more than that. And then we've got the City of London Investment Group, which is up 13%. Very steady company. I really like their financials. It's there for the fact that it's undervalued and they have a nice dividend rather than any excessive growth. One of the favourite growth stocks here is K3 Capital. That's up 56% in a matter of months. That's one I'm quite excited about. And the old adage of I wish I put more in applies here. And then we've got Investec, so that's another bank, and they were trading at between 0.3 and 0.4 on a price to book basis. I entered a position last year. They're up 25%, which is nice. And a bit disappointed plus 500, which is down 8%. Financially, they're very good. I didn't do enough research to see that their potential future growth prospects might not be as good as I thought they were. I need to do a bit more research into that. I'm not worried about them failing. I get to Avast, which is the antivirus company, so they're level as a return. And that's one I should have seen a lot earlier because I was using Avast well over 10 years ago on some of my personal devices. And yeah, I could have identified that one a lot sooner. I missed out a lot of their growth. Duke Royalty, which is kind of an alternative financer, up 11%. That's a bit more of a punt, but I'm quite excited about potential growth on this one. And then I get to Fever-Tree. Now, Fever-Tree is one where I really, really like the company. I really like their products. It's my favourite tonic, especially with the gin tonic. I highly recommend it. They're up 11%, but I had the opportunity to buy them at a third lower price point than when I did buy them. And I sort of hesitated and I didn't buy them. So I'm a bit disappointed because my return could be a lot higher. And then we've got Hargreaves Lansdown, which is down 5%, Medica Group down 2%, which are relatively small positions. And there's the final main fund, which is the Marlborough UK Microcap, which is up 22%. And then last and actually least is the LF Equity Income. And this was one of my biggest investment mistakes. It's only a slither now because most of it's been sold. It's down 45%. I put £500 or so into this fund. Made the mistake of going for the star fund manager. I think it's Neil Woodford, and he was a bit of a star manager here in the UK. He left his company and went out on his own to start his own kind of business up. And I took some money into that position. And yeah, of that initial investment, looks like it's down 45%. Managed to sell most of it off, so there's only a tiny bit less. So overall, I think I'm pretty happy with the stuff that I've done in the last 12 months. And most of those are in plus double digits. I need to have a think about what to do with the indexes. I'll probably leave them and not add to them. Just need to put a bit more thought into that. And again, the same with those funds. They have performed well in the time period that I've had them. So the two big ones there in the bottom right corner, over 10% a year annualized return. So that's cool. And then the investment grade bond one's done it sort of 6 to 7%, which you'd hope for on an annualized basis. That's the portfolio. I'm not planning to put a huge amount more into the UK market at the moment. So I spot a company that's particularly undervalued. I think I'm focusing a bit more on the American scene. Yeah, there we are. And if you aggregate all of that, that's a total return of 29%. You can see that a lot of the companies in the last 12 months are kind of getting towards that level. Some of the older stuff that's done well has exceeded that, but it's been dragged back by that first and second position, where a third of the portfolio been growing at 16 and 10%. They've kind of dragged that 29% back, which would be a bit higher. So the return for the UK portfolio is very reliant on that kind of overall UK market position. So I hope you found that interesting. You see what I've money into. And probably the last point is questions. Maybe what's your favourite position there? What are your favourite stocks? And if I had to pick 3 or 4, where if they dropped to a target price, I'd pile in. Aviva would definitely be one. Legal and General would be one. Fevertree and K3 Capital. I think those 4 are my favourites. Fantastic. So if you found that interesting, do leave a comment below if you have got any of these positions, or perhaps you've identified some UK companies that could be a good addition to my portfolio. Please share that with everyone. Really appreciate it. And yeah, thanks for your time. Have a good day.